You don't go and dance it. I will not really respect for God. Good evening, everyone. Welcome for joining. Welcome, everyone. Thank you for joining. Thank you for joining. Right? This is day six of the 30-day backtest challenge with Divine Crypto aimed at helping struggling traders who are finding it difficult to create themselves an edge in the market, to be able to extract themselves an edge. And what we are doing here, what we've been doing here for the past 5, 6 days has been studying from price action and taking notes and learning the reasons why price acted the way it acted. And the aim for us is that at the end of this 30-day period, I will be able to extract this information and this data to create or carve a working model for traders to help them get better at trading. And I also mentioned that at the end of this, the everyday compilation of what was studied over here would be compiled into a compendium which I'll be sharing to members of the Divine Trader community to learn, study, and take notes from as regards some of the pointers and characteristics of certain price delivery on the chart. Now, I'll be sharing with us today a very secret source that I was able to pick on the chart as to how best to trade imbalances or fair value gaps on the chart during a downtrend. So this is from Bitcoin price action. Over here, you can see price creating us a high, a low in this uptrend, higher high, higher low, higher high, higher low, and a high that now got broken. So now, this is the point of concentration for this course today. We are looking at understanding or taking note of the reasons why price came back to react or mitigate this imbalance or this fair value gap over here and continue to the downtrend. If you're just joining, if you're watching this anywhere, kindly subscribe and hit the subscribe button, turn on post notifications, and expect more solid crypto educational content, activities, webinars, and all of that that will help you get better on your trading journey, courtesy of Divine Crypto. Now, this is the point of concentration on this chart. So let's take it back one more time. But please, I note this always, which is that backtesting is not the same as real life trading. Whilst your backtesting price has already yielded, price has already delivered and given you prints of the, you know, result that you are to pre-analyze if you were taking that trade in a real life situation. So you already have, let's say, the solutions to the problem or the answers to your question. So you are basically supposed to just be revising and not trying to, you know, forcing your thoughts or your concepts on the market because price has already acted. You are just supposed to take notes. And it is not the same as real life trading in the sense that when you are backtesting, you already have the answers to your questions. But in real life trading, you have to figure out where price will be coming back to, figure out why price should react here. But if most likely you have backtested whatever model you are working with and you have seen that these are the reasons or these are the certain criteria that I have seen or certain complexes that I have seen on the chart, then you have a higher chance or a higher percentage of getting better at this whole trading thing and ensuring that the risks you take are worth it and the rewards you are looking at getting are also not coming from a place of vibes and inshallah, but actually they come from a place of, factual historical data backing your trading decisions. All right, so over here, we're taking note of the previous trend that was invalidated, and we can see the invalidation of this point. Now, scrolling down to the 4 hour time frame, I'd like to put this further back so that it's a bit more easier to comprehend. But there's a reason why I left it though. Um, okay, I just let it stand still. All right, so moving down to the 4 hour time frame, let's be sure to always take note of this mini structural movement over here. This mini structural movement from here to here, this point, this point, then to this point. So yeah, let's take note of that and we can see that price broke below this point. Yes, price broke below this point, courtesy of this fair value gap overhead. And also, let's validate whether it broke below this low point also. So this is having a low of 5504. This is coming from the OHLC level indicators there. Now, this is having a low of 5504, and this is having a low of 5500. So definitely this low also broke below this point, courtesy of that fair value gap there. So what are these are the features of price action for a model like this to work. So we're just taking note of what price showed us on these um, charts over here. Now, that is clearly taken note of. And one other thing that we should also take note of is the um, whole price action on this area. That should be something we take note of. Please, I'd like to clear this, and that would be one price breaking above this high. Price breaking above this high. We can see something or take note of something, which is this simple one, two, and three leg movement of price. And the reason why is because some of these things have their meanings. But like I said, we are just taking note of these things. As we go and come across some of these other specimens being displayed in price action, we will now properly cast out which of these criteria, factors, and you know features or characteristics we should see to validate that particular approach of trading. Now, that is taking note of. Scrolling down to the 1 hour time frame, oops, scrolling down to the 1 hour time frame, what more can we see? All right, so we can see that internally inside of this imbalance, there is this subtle area of contention. There is this subtle area of contention over here. Sorry for that. Please kindly affirm if you can hear me, and so we proceed or continue. So can you see my screen? All right. Sorry for that break. If you are joining us and if you are just watching this, welcome to day 6 of the 30-day backtest challenge for struggling traders, courtesy of Crypto. This series of challenge is to help us study from previous price action and extract certain features, reasons, and certain confluence facts that we can use in futuristic price action or price delivery to help our approach to trading and helping us see that we can create or carve a working model at the end. And on today, we are talking about a very, secret source way of trading imbalance that we are studying on the chart. And so far, we've been able to take note of the price reaction from the higher time frame where price has to break the low structure and do all of this and do all of that. Well, back to where we stopped or where we um, had to continue from. So now, one thing I want us to note was this contention area over here, this area of contention. Now, then this would have been where most likely would have injected the liquidity that broke below this lows. Now, what are we taking note of here? We're taking note of this area of contention first over here. We're going to check it out on the lower time frame to see what it's showing us, and on the 15 minutes time frame, what can we see? Alright, so on the 15-minute time frame, we are also taking note of this price action. That's the reason why this was something we had to take note of from the higher time frame where we saw it being delivered, because it should also help in your delivery or in your interpretation of this next time. Because price didn't just act this way if there was no reason behind it. Now, what can we see? It's looking like a rough sheet. God, God. All right. So one thing I'm taking note of is this three leg, one, two, three. So now price coming and failing to continue over here would most likely be where the grab of liquidity started from. And what can we note here is this. We can note that, oh, this was the exact other block that broke this two-legged area and had this, little other block mitigate it almost immediately. And now, this was where price reacted to. So now I have no other option to argue with price as regards why price acted this way, other than to take note of these things that come across my eyes and take note of them in the sense that, oh, on the next scenario where I see this particular model, I should expect to see, oh, if I go on the lower time frame, I could see price creating with this three-legged structure, and at the point where this last leg is broken, if there is a mitigation back to that other block there. Something like this is the data that will be extracted from this model, and we can see if price delivered from our area of interest, which would have been that other block. So, but Welcome back. Welcome back. This is day six of the 30-day backtest challenge with Divine Crypto for struggling traders, which is aimed at studying through previous price action and being able to extract a working model for us at the end of this series. And so far, we've been discussing ways to trade um, diverse market conditions. And on today's discuss, we are looking at the secret sauce to trading imbalances in a downtrending market. So far, we've been able to take note of certain need nodes that price has to make for us to be able to validate this particular model as one that works properly. Now, checking back on the 15-minute time frame to continue from where we stop. Okay. Yeah, so on the 15-minute time frame, we saw this other block. So now on the 5-minute time frame, let's see what we can get again. All right, on the 5-minute time frame, we can see that, okay, that week also that had mitigated the main order block was also created as another order block internally. So now all of some of these things are what we will be taking note of generically and seem to have it be that when we cross-check on various other markets and other displays of this model, um, we take note of what works or what comes out the most to be able to define that, oh, in a constant um, use of this model, this should be what and what is valid to say, oh, when I see these things, this should be what I conclude that will make this particular trade hold from this point, make this particular trade um, reverse from this point. Now, this is clearly noted, and if we really check this, this was, like I said, where price reacted to. So, but now some of these things have to be taken note of, which is majorly the break below this target structure that price created here, and the comeback to the upside where price mitigated over here and created us um, other block. Now let's overview this um, in action and see to have it be that, okay, yes, some of these things we took note of actually make sense if we don't get invalidated. So now one other thing to take note of, like I said, would be the range of you know, stop loss that was worked with when backtesting. So now if I'm backtesting this model and I'm seeing that most of my stop losses are giving me a 10% opening, I should not want to trade that approach in real life and be expecting that strategy or that model of trading to give me something less, most likely. So now Okay, so having take note of some of those things, there are still certain other things I'd like to bring your attention to once price commences its delivery. Now, really, this would have been the best place to take our profit from. But these types of trade would only come or stem out from a place of actual confidence that, yes, over time, time and time again, these market scenarios have yielded in such type of results and stuff like that. So, but other than that, you just really be vibing, trading with anticipatory moves and hoping that every trade you jump on gives you solid proceeds. So this would be one of the things that I am taking note of this particular price delivery. And now, okay, also to take note of this break below this point and the build up of price over here. It's one other thing that I would take note of. The build up of price over here. So now, oops. All right. So I said the build up of price is one that we should, you know, properly take note of, which is this whole leg to be upside again. This should be also something we take note of because both this contributes to this model of trading actually being responsive or actually being a working model. So let's actually check this and see to have it that it's delivered or not. And we can see that very well price did not break beyond the the- basically you can see that um, price really didn't take us out of this. So these are some of the things to take note of. The time frame, the structure patterns that price respected, the stock structure patterns that price rejected, and all of those things should be what we take note of and extract a working model. So that next time we can just chill and know that, oh, best case scenario, this is what should happen, and worst case scenario, this should also be what happens in price action. So now, this will mark the end of today's session. Thank you very much for joining in. And very much, I'll repeat the fact that on a day to day basis, whatever models or whatever approaches we extract from price will be compiled at the end of this session into a compendium for the members of the Divine Trader community where we will share and give this out to them. For persons who would find or understand the value of that material, kindly do not hesitate to join the Divine Trader community. The links to joining these communities will be dropped in the description or the comment section. And subscribe to this channel for more and more and more crypto knowledge, crypto education. And if you have any questions around what you're seeing, what you're learning, do not hesitate to drop them under the comments. And please note, these are not concepts that I am I'm formulating. These are various basic concepts that are known to the trading space. We are basically just walking back in time to see how the combination of this concept can help us interpret price action and also help us create a working trading model at the end of this backtest challenge. Thank you. See you next time. See you same time, same station at Divine Crypto on YouTube.